Hi there, it's Trisha, and I wanted to go over the two trades that I took today, Thursday, March 5th. I took two trades, like I said, and you can check those setups out at www.easyminitrade.com. I used two setups, one off a longer tick chart, one off a smaller tick chart, and we use indicators for confirmation before we ever get into a trade. So, as I've said before, a very conservative approach to trading. And it is not for everybody, but it works for me. What I'm going to do is, I've been getting a lot of people asking for me to show the exiting in stages like I do. Up until now, I've just showed you exiting based on trail stopping and trading one contract. So I'll share with you how I exit, and then this way when you're trading multiple contracts, that might help you to have a gauge as to your targets. The first trade that I took was at 11:15:31, and we have our squeeze indicator firing off here. We have divergence on our indicator going down, price going sideways. And again, by what I mean by sideways also is, yeah, we have it coming down, but then it comes back up to where it came from. So you would expect the indicator to go up as well, and it doesn't. So that's divergence. Okay, it's going down while the price is going sideways or pulling back to a previous area of resistance. So that is divergence. The first arrow here is where the setup is occurring on our longer tick chart. So we're okay, we're below both moving averages. Our indicator is in correct alignment here. Our trend indicator is actually above 20, so we're okay to take that trade. I hit a market order, and I get filled over here at 689.75. And what I do is I exit in stages. I exit in thirds. So for one third, I have a target of +2. Second third, I have a target of +4. And then the third remaining lot, I trail stop. So with that said, what happens is when you place your order, you can place what's called an order send order, or you can use an order cancel order, or you can do it manually. But as soon as I get that +2, I'm out of third. As soon as I get +4, I'm out of third. And then I just manually move my stop on that final third. Now, of course, while price is moving, I still am moving my stops on my remaining contracts. So, let's say I get my +2. I still am moving my stops to my pivot highs or my pivot lows, even though I still have an order in for +4 on the next lot. So that's how I do it. So on this particular trade, I did get my +2, my +4, and then on that final lot, I stopped out at +3. So using your pivot highs, this was actually the pivot high down here. I moved my final stop to a quarter above that area, and we got stopped out over here. So even if you were just trading one contract and you just exited using the trail stop method, you would have had +3. Now, another way to exit is you could you're in the trade here like the rest of us. When the indicator starts to have smaller bars, which means decreasing momentum, you can just hit a market order to get out. If you see the indicator down here crossing over against your trade, you can hit a market order and get out. If you see price close above the moving averages, you can hit a market order and get out. So it really just depends on how many contracts you're trading and how you'd like to exit the trade. If you're trading just one contract, you can put a limit order in for +3 right off the bat. So as soon as you get the price to that area of +3, then you'll just automatically be taken out. Totally up to you how you'd like to exit, and it really does depend on how many contracts you're trading. And I don't recommend that you start trading multiple contracts unless you've practiced with multiple contracts in your simulator account and exiting I think it's important because you do have to move fast. If you're doing everything manually, you do have to be able to move quickly when you are trading off this smaller tick chart. So best to kind of just have everything programmed in and ready to go if you're able to do that. And most platforms nowadays are. So you might want to just look at your support area and see how you can get those orders already in place while you're in the trade, which would be executed at the same time as you're putting in your entry order. So hopefully that didn't just confuse everybody a little bit more, but hopefully not. The next trade that I took was at 12:03. I was still here, so I took it, and this actually was setting up on our scalp indicator. And we're not oversold yet, so we're not coming from divergence, but we're not oversold. So I hit a market order and got filled over here. Actually, the first blue dot was actually firing off over here, and there was some red showing. So you could have gotten in a little bit sooner, but I didn't get in until actually this bar here, and we were not oversold yet. So our indicator also was above 20. This is the bar that's setting up, so we're okay. We're below both moving averages. Our indicator here is okay. So anyway, on that one I got +2 on a third, and then on 2/3 I was trail stopped out at +1 1/4. My stop was a quarter above this area here and got stopped out over here. So if you're trading just one contract and using the trail stop method, then you would have been stopped out at 1 1/4. Now I wanted to show you this trade that I did not take, and I just wanted to point out why I didn't take it. It's looking really good. Obviously we have a scalp setting up with our squeeze indicator. We have divergence. Price is actually going higher, indicator going lower, so that's nice. So anyway, we have divergence, and our indicator actually at that point is above 20. It's right over here. So I would still take that, of course, if everything else was in alignment, because obviously we don't know that the indicator is going to go below 20 down here, because this is obviously, all we can see is up to this point right here. So everything looks good on that chart. However, when you come over to our longer tick chart, this is the bar that it's setting up on, and this bar has not closed yet. And normally, since I'm using that tick countdown, I don't mind getting into a trade if it looks like the bar is almost ready to close. But what stopped me is that our indicator here is not in alignment to go short. So, that's what kept me out of the trade. And obviously if you took it, it would have worked out. But I just wanted to point out why I passed on it. But you certainly could have taken that. Even though this bar was not closed below that white bar, the white moving average, you had resistance above you of our other moving average. So realistically, it's not going to slice through that. So again, just depends on how you like to trade. You know me, I like to wait for everything to be in alignment as best I can, but that could have been a trade that you took, but I did want to point out why I didn't take it. Now, I would not recommend taking it just because this indicator is not in alignment, but that's a judgment call that you'll have to make on your own. So anyway, those were the two trades that I took today. Again, if you're trading one contract and using the trail stop method to exit, you would have had a gain of 4 1/4. And if you were exiting in stages, the first trade we got our +2, +4, and then trail stopped out at +3. And then the second trade +2 and trail stopped out at 1 1/4. So exiting that way with multiple exits, you would have had a gain of 12 1/4. So anyway, just depends on how many contracts you're trading and your style of trading, and I should say style of exiting. And you can check those out at www.easyemintrade.com, and I hope that helps clarify how you would exit in stages.